Hi, everyone. Welcome to the latest Carson's Take 5 with Ryan and Sonu. Sonu, we're going to get into some things. We're titling this one Some Good News and Some Bad News. There's really more good news than bad news, to be very clear, but we're going to point out some potential worries. But I see behind you, your horns are back. Now, if someone were to look at some older videos the last couple weeks, your horns have been misplaced, but they're back. Tell us about that.
I thought someone stole it, but it was back. No, I was just going through like a rearranging thing, and honest to goodness, I lost it, and it just showed up, and I was like, now is the time to put it on because we are past January, and you're probably going to tell us February is not as good as January, right? As these things go.
Yeah, it's not the end of the world, but I'm just glad I think your kid, you got twins. This for those who don't know, you got 7-year-old twins. Did they take your horns by any chance, or who knows?
I don't know. If they did, they returned it because they probably didn't know what to do with it, or they got bored of it or something.
There you go. So let's start the clock. We've got 5 minutes to discuss some good news and some bad news. So the good news is, again, we're literally hitting like all-time highs last week on the stock market. The economy's strong. I mean, we just had some jobs numbers, some productivity numbers, consumer confidence. I don't know if it's possible for you to wrap those three things up in like 2 minutes or not, but tell me just how good are things on the economic front, and what do you want to focus on?
At this point, it probably couldn't get better. We're getting like, well, I'm not going to use the word. It's too tired and cliched, the word Goldilocks, but that's what it is. Look, the economy is doing. Last year, we know the economy grew more than 3%. That's above trend. And this past week, we kind of figured out why that happened, right? Why did the economy grow as fast as it did, above trend, but inflation fell? Well, because of productivity. Why is productivity rising? Productivity is running at 3.9% annualized pace over the last 3 quarters. That's the highest we've seen during non-recessionary periods since the late 90s, right? Why is that happening? Because of a tight labor market. And that gets to the other big, massive data point we got last year. 353,000 jobs created in January. And then before that, the worry is like, but look at it's going to be revised down. Look at all the negative revisions. But hey, guess what? December is revised up from 216,000 to 333,000. Last 3 months, averaging 289,000. It's the highest in about 10 months. 2023, all of 2023, job growth was revised higher from 2.7 to 3 million jobs over the entire year. So we are coming into 2024 with really good momentum. And the unemployment rate is close to 50-plus year lows at 3.7%. So can't really ask for more.
Well, that does sound pretty good. And let's not forget, so we created 3 million jobs last year. We had 5 million the year before. So if my math is right, that's 8 million jobs the last 2 years. You think about productivity. Well, a lot of people are happy where they are. There's surveys. Sometimes, surveys, I take with a grain of salt. But a lot of surveys are showing people are happy where they are. And there is actually data of people that are quitting, people that are getting laid off. Bottom line, companies are kind of hoarding talent, and people aren't really quitting. So all those people that started these jobs the last couple of years are going to really start to be more productive down the line, not to mention the incredible technology advances we're seeing, the AI advances we're seeing. So just a lot of positives. Let's talk about consumer confidence. I think a lot of people understand this, right? Consumer confidence has been soaring, Sonu. Talk to me about why that really matters for the whole picture here.
I think stock prices are up, home prices are up, gas prices are down, but I think also gets to what we were just talking about, the labor market, right? You mentioned layoffs. Layoffs are running as a percentage of the workforce, right? Layoffs each month are running about 1%. Now, to give you context, to all of you listening, what does 1% mean? Well, before the pandemic, it was 1.2, 1.3%. So layoffs every month is running about 1.5 million. Before the pandemic, it was 1.8 million. Plus, we have a larger workforce right now than we did 4 years ago, right? So that's one reason I think why consumers also telling us the labor market is strong. Even if you don't believe or don't want to believe the payroll data.
Don't trust the government? Is that what you're saying, Sonu?
Right,
we don't trust the government?
Trust the government, right? Well, I guess you trust what other Americans are saying about the U.S. economy and the labor market, and they're telling us it's really strong, right? Jobs are plentiful to get. That index went up. Jobs are harder to get. That index went down, right? So the difference between the two increased at the largest rate, month-over-month rate in history.
Wow.
In January.
That is clearly some good news. We'll kind of leave it at that we simply just don't see a recession on the horizon. You tend to have better performance from the stock market when you don't have a recession. But we call this, again, some good news and some bad news. We'll be very clear. Is it really bad news? I would say no, just that's the title we wanted to use. I mean, it's some things to think about, Sonu. So the stock market gained over 25% last year, gained over 3 or 4% to kick this year off the first month or so. Just be aware that February can sort of be a banana peel, kind of hard to say, a banana peel month. Historically, it's one of the weaker months, but in an election year, it's like the second worst month. September is usually your worst month. That's fine. Sure. But February is kind of weak. And honestly, after I said, we had a big year last year. I look, Sonu, after a 20% year or more, what happens? February's been kind of weak as well. In the last 2 times in 2020 and 2022, we saw fairly large drops actually in February. So not the end of the world, nothing to be overly concerned with. I'm just thinking, if we had a little weakness, also, by the way, first quarter of a presidential year tends to be a little weak-ish as well. It's later in election year. Apologies, an election year. First quarter of an election year tends to be a little weak. It's later in an election year you get some strength. So I just want investors to be aware, if you see some red finally on your screen, you might say, what's that color on the screen? It happens. It actually happens, and that's just something to kind of be aware of. But overall, we still see a lot more positive. How are we doing on time-wise, Sonu? I think we got like 30 seconds or so. So anything else that maybe let's talk about, and maybe it's not bad, but maybe worries you? And again, about 30 seconds or so.
I think at the end of I talked about productivity is high, inflation's going down, and that's why inflation's going down. Productivity is high, even as we're seeing strong economic growth, right? What could upset that apple cart? Well, if the Fed, I know I keep repeating myself with this, but I really think, honest to goodness, that's the biggest risk, that the Fed keeps interest rates too high for too long.
There you go. So without all of that, everyone, this was your latest Carson's Take 5 with Ryan and Sonu. Some good news and some bad news. We'll see you. Have a great week and enjoy the Super Bowl, and we'll see everybody next week. Take care.